Welcome to Dad's DeFi Space. I'm Kevin, and I appreciate that you took some time out of your day to spend it with me here just to learn a little bit more about this crazy crypto and DeFi space. Before we begin, please like and subscribe. And if you enjoy content like this, ping that notification bell. And remember that nothing today is financial advice. I am not a financial advisor. I'm just a dad who enjoys exploring the crypto and DeFi space. So, we're going to be taking a look at a couple of different things today. Have you ever found yourself thinking, everyone is making money in this place but me? And it's not true usually. Now, the market has been in a downtrend for quite a bit over the last, say, 2 months. Like around December to January, we had a peak ending with Donald Trump's inauguration, and we have been in a downtrend ever since. So today, we're going to take a look at Bitcoin and try to figure out which direction will it go, because this should affect our decisions. Bitcoin has been in a downtrend. We tried to have a pump the other day. This had to do with the crypto summit, but it was a big nothing because shortly after, Bitcoin dumped back down. So we'll take a look at the levels in just a minute. And today we're also going to talk about a 10x DePin AI and gaming altcoin gem that we have already written about on our website, dadsdefispace.org. So if you are interested in learning crypto and DeFi basics, check out dadsdefispace.org. Right now, we're putting out a lot of articles over different altcoins because not financial advice, believe that the bull run is winding into its last phase, and we need to be positioning into assets that are going to take advantage of the price appreciation. So what I wanted to start with today is right here. We were going to take a look at that's just briefly. Oh, excuse me. Actually, we'll just take a look at the markets first. I had a meme I wanted to show you, but we'll get back to that in just a minute. So we're going to take a look at general market structure before I go back to what I wanted to show you on X. Right now, Bitcoin dominance is sitting at 60.5%, not much different than it has over the last few weeks. And on that note, there is X. This was what I was looking for. Sorry about that. We'll just leave that over here and we'll talk about it in a minute. So if you take a look at the Bitcoin dominance chart, we have been in a downtrend since, or not a downtrend, excuse me. We have been in a downtrend, even though Bitcoin dominance has been really high over the last, no, excuse me, not a downtrend. We have been in an uptrend with Bitcoin dominance since the beginning of December, where we were sitting right around 55%. We are back above 60%. I think we got as high at the top as, let's see, 62-ish. And whenever Bitcoin dominance is higher, altcoins are going lower. Now, we don't just take a look at Bitcoin dominance. There's a lot of other things that you need to pay attention to in this crypto market. Market cap has been on a downtrend over the last 2 months. We are now sitting at $2.75 trillion. I'll be much more bullish once we get back above 3 trillion, which is right around the peak right here. The last time we hit 3 trillion was March 6th during that last pump. If you take a look at ETF flows, they had a ton of outflows over the last little bit, but some inflows have been ticking back up, even though we haven't really gotten there to that point. Now, excuse me, open interest on Bitcoin is around $352 billion of perpetuals, and this is leaning slightly to the short side, although many of those shorts have covered at this point. And I wanted to take a look at Jerome Powell before we get to the rest of the stream. I saw this meme from Digital Asset News and it caught my attention. I think it kind of explains the issue with the Federal Reserve and fiat currency. And on top of that, it shows the stupidity our governments support, taxing all of us with that invisible tax we call inflation. So first and foremost, we start with lower rates. Lower rates means more cheap cash. More cheap cash means more investment. Now, what happens is the economy can only take so much of this because as you print more money, inflation goes up. As inflation goes up, investments tend to go down. And that is because producing becomes more expensive, of course. So after we have a weak economy, we get quantitative easing. This pumps lots of liquidity in the market. If you check the M2 money supply, it has been on the rise recently. This usually tends to lead to higher inflation. That is why we invest in strong assets. Those strong assets help our money to retain its value. And that's what this is all about in the long run, not Lambros, not buying 4 different houses, or even what we invest in crypto and DeFi for is to preserve the value of what we earn. This helps you, it helps your family, and it helps to promote financial freedom, which is the best freedom. Because without financial freedom, how are we truly free? So this creates a cycle because once inflation gets high, the Fed has to begin to raise rates again. And they always talk about a soft landing, but rarely does that happen. As they raise rates, the economy starts to decline, and eventually we end up in a recession. They then lower rates due to the weak economy and begin quantitative easing again. Just something to be thinking about. Now, next, I want to take a look at the charts before we get into our altcoin, our DePin, and gaming AI play that I want to discuss today. And we'll take a look at a DeFi lending hedge, very simple to perform, that I'm using on Camino Finance. Really, really simple to perform, but stay around to the end of the stream, please. All right, so let's take a look at stocks. Look at some stocks first. This is the S&P 500, and it has been weak as can be. This blue line right here, this is our 200-week moving average. And yes, we did have a blue cross on the stochastic RSI back March 13th, but we still haven't gotten above the 200-week moving average. If the S&P does not get back above this 200-week moving average, I would expect us to touch back down lower, maybe as low as 5,400, which we touched that back on September 11th. I do not believe that this bull run is over, but I do believe that there may be a little bit more down to go. That is why, looking at Bitcoin, we are still slightly short on the market. We're taking a look at the Bitcoin chart now. And as you can see on the Bitcoin chart, we are fighting our butts off to try to get back above this 200-week moving average right here. What's interesting about this is if we can't get above the 200-week, I expect Bitcoin to go back down and test lower ranges, maybe around lower 80s, maybe as low as touching back down in the 78.5 to 79 region. And yes, we could go even lower than that. Now, you're going to hear everybody screaming, the bull market's over, Bitcoin is dead. Now, Bitcoin has died 100 plus times. Understand that. And it always makes a miraculous recovery. So the bigger question when we start talking like this is how do we play? Well, right now, until we get back above the 200-week here, I am very bearish. Now, once we get back above this 91, say 3, 91.5 region, which is one of our now resistant areas right here on the chart, then maybe we can continue this bull run. So because of this, what we have done currently, and I'm going to go over on our week's account real quick, is we have been running a 10x Bitcoin short. This is my own play. Be careful when you play with leverage because you can liquidate your account. I always do this with only a small amount of my portfolio. We're talking less than 1%. And on top of that, I'm always rolling profits into liquidity positions to earn yield, stable coins or Bitcoin usually. Now, sometimes we use some of that. We'll lend it out, and then we use that to add to our bull run bags, aka altcoins. If you're interested in trading with us on weeks, please check out the QR code or the referral code down below. I also have links within the stream and the chat if you are interested. But to get back to the Bitcoin chart for today, what does this part of the chart show? None of us know. None of us know. Not me, not any other influencer or analyst out there. Now, the smart ones can make great educated guesses, okay? But in what we see here, I expect Bitcoin to do a number such as this. Hold on one second. I expect Bitcoin to either come back above, let me draw. Hold on one second, ladies and gentlemen. Yeah, it's I don't know what's up with my charting tools right now. So just watch the mouse, but I expect Bitcoin either to get back above the 200 week and hold this as support and continue on so we can manage our next level on the chart, or as we've been rejected, this is what I expect to happen, not that it will happen, is that we are going to come back down and test our lower range around 80K, at least within the short term. Now, this is how I'm playing this game. You need to do your own research and see how you are going to play this game because, again, I'm not a financial advisor. These are just my own interpretations of the charts. Now, before we get into the rest of the stream, I wanted to take a quick break and look at some of the news. These add a little bit more bullishness into the stream. Recently, over the last couple of days, Bitcoin ETFs have seen a $744 million worth of inflows after 5 consecutive weeks of outflows. Those retail ETF investors are dumping their bags, and I have been happily buying some of that dip very carefully because, again, I think we could still possibly go lower. This is, in my opinion, bullish in the midterm. The short term doesn't matter, of course, but it should dictate how we approach our plays. Now, This leads into a new article I'm posted. This is from X. And what you see right here is Senator Loomis, who has been a huge Bitcoin bull. And she has proposed a plan, a budget neutral plan for the US to acquire more Bitcoin by swapping some of our gold after this Doge audit to Bitcoin. So, if you were listening to any of the news, our government has been saying we want to acquire more Bitcoin. They just want to do it in budget neutral ways. Now, I know that everyone thought that this was going to be hugely bullish, buying a lot of US and governments buying tons of Bitcoin. That has not happened yet, and hence it's falling down. But I don't think people are thinking about the big picture. The big picture and why I'm so bullish on Bitcoin is there's going to be a race. And I want to make sure that I have Bitcoin within my hand before it's all gone, because there's only 21 million out there, of course, right? Now, what I would like to look at next, we're going to go back to our charts today, because I would like to take a look at Ethereum and the ETH Bitcoin chart, which are some ones that I really like to keep my eye on, especially as we're approaching what I believe to be the end of altcoin season. All right, come on, chart. We're having to reload. Sometimes our internet here has issues, and that is kind of what's happening today. So hopefully the stream is working well. Let me know in the chat if it's been lagging pretty bad. What I would like to take a look at now is the Ethereum chart. And it looks way weaker than Bitcoin's. Ethereum has been on this massive downtrend. You can see my old fib lines, and we are below the zero level right now. We are also below our 200-week moving average. I don't even want to discuss our bull market support band. But what I would like to look at this point is how we compare our downtrend of ETH versus Bitcoin. Actually, hold on one second before we go to that chart. I did want to talk about this before I move on. The ADD today is getting the best of me. But if we look at the bottom of our chart right here, we bottomed out around $1,779, and we rose. Kind of the upper part of our resistance is 2166. I will be bullish a little bit more on ETH once we get back above into the 2200 range, but really I want to get back into this range right here between $2,300 and $2,800. Now, I do believe ETH has a long way to go, as you can see on the chart, our all-time high being just a little over $4,100. But I don't think people are going to be bullish enough on ETH. The bullishness of ETH is going to happen all at once. Everyone's going to experience FOMO, and they're going to buy in at the wrong time. That's just my prediction, of course. But that is why we are still farming ETH, farming Arrow, and providing liquidity on the mainly the base ecosystem and the Arbitrum ecosystems right now, although we are considering Barachain. But that is a video for another day. Now, I would like to take a look at the Ethereum. I'd like to take a look at the Ethereum Bitcoin chart. I'm going to zoom out on this one, because what I would like to show you on this chart specifically is how we have performed, well, since the beginning of the downtrend. This is the Coinbase chart. As you can see, we broke below the 0.03 level, which was my line in the sand. Gosh, when did we break through here? That was in end of February. My bottom range was 0.03. And as you can see, we have gone a good, oh my gosh, let's measure this out. A good 22% lower since what I thought was the bottom range. See, we don't get it all right. That is why you need to learn to do your own research, right? So when can ETH continue on and start showing some strength, which means, our altcoins will start to show strength? Well, first, ETH needs to get it back above 0.03 in this trend line. And then finally, we got to get out of this upper trend line, which, you know, as this continues, we're probably looking at needing to get back above 0.04. ETH is going to get really, really bullish once that happens. So if it was me, I have alerts on the 0.03 level and the 0.04 level, because that is what I'm waiting for. Now let's take a look at the others chart today. The others chart is a great one to look at to determine, hey, how bullish are altcoins right now? So the others chart basically is all your cryptocurrencies minus the top 10. Those top 10 altcoins are your large caps, of course. And this gives you a look at some of the smaller cap stuff. As you can see, we're kind of range bound. We are still within our channel, the lower range of our channel, although we are ticking back up. I am keeping an eye on this because we have been on an uptrend over the last week or two. I'd love to see us back above this $324 billion level, but I'll feel much comfortable once we get out of our trend channel right here. A lot of people call this the degen chart, and the degen chart will show us when those mid to smaller cap altcoins really start pumping. This is a great one to look at the bullish of the markets. Now, if you want to not be as degen-y, you can use the total 3, which misses, it's skipping Bitcoin and Ethereum, or the total 2, which just takes out Bitcoin. And as you can see, all of them are in a downtrend, and all of them are kind of pushing up towards the center of that downtrend. Right now, we're looking at the total 2, which is sitting at $1.08 trillion. And I want to see us get back above 1.2 before I'm going to start getting bullish again, which is right here on the chart. I want to make sure, though, that before this happens, a lot of my larger cap altcoin bags are packed, and I'm not sitting there still dollar cost averaging into positions. Now, I want to change up the stream now. We're going to be looking at an altcoin that I'm super bullish on. We believe that this altcoin is going to be one of the big players in the AI, DePin, and gaming narratives. Now, you're probably wondering what this is. And if you are a member of Dad's DeFiSpace.org, you have already heard of this coin. And this coin happens to be Aether. Now, is Aether the next big thing in decentralized cloud computing? And we're going to have a deep dive into its bullish potential. I believe that Aether has an opportunity to 10x this bull run, maybe even more. But I like to keep my predictions conservative. Aether is a cloud computing protocol, right? And allows people to sell unused GPU bandwidth. Now, what's interesting about this is that means that it opens up cloud computing, AI computing into the masses. It makes a decentralized network. Now, there are other ones out here that do this. We have Render, which I'm also bullish on. That's on the Solana network, and many others in this space. But why am I bullish on Aether? Well, number one, Aether is a much, much smaller market cap than Render, so it has the potential to run more, but that also means our risk is greater, right? Aether is not just another decentralized cloud computing project, such as, like we said, Render, Akash, but it has a much sharper focus on AI gaming workloads and compute workloads. So there are 4 things that make it, in my opinion, a bullish project. Number 1, scalability and efficiency. The Aether network is a distributed GPU cloud network. It has low latency, high availability, and this is unlike most centralized networks. It's very cost effective because of this. This helps for seamless Web3 integrations, which will be required within the gaming narrative. And yes, I know gaming has performed terrible, but we still believe that gaming will have its time to shine, much like last cycle where it occurred almost towards the end of the cycle. Aether also has a very active community, and programs like Aether Forge help to engage users and incentivize participation in the network. The more participation within the Aether network, the more opportunity for price appreciation. Now, what is their role? Aether gives AI cloud computing decentralized physical infrastructure because you're monetizing GPU resources we are not using, and this could help with the cloud computing gaming revolution. So let's look at some of the components of Aether. Aether's tokenomics are decent, right? Their token also plays a crucial role in powering their transactions and rewarding the people providing GPU compute. Now, the primary uses of Aether are payments for those GPU resources and incentives for those providers. Now, at this point, Aether has around 10% of their supply unlocked. Okay. Their max supply is 42 billion Aether, and right now the circulating supply is 8. So the biggest concern we have with Aether as far as tokenomics is we have a good amount. You're talking 5x of the supply has not been issued yet. So let's look at some of this. Right now, 35% of that is remaining locked. These are scheduled unlocks. These are allocations for nodes, which is around 50%. The nodes are getting a huge percentage of that. I wish I would have went in on the Aether nodes earlier on in the cycle. 12.5% for the team, which is vested. They were trying to ensure a long-term commitment. That is a good thing, and I like that percentage. And 11.5% for early investors. These are the gradual unlocks. Okay. If you look and use the article within Dad's DeFi space, you can see some of the charts and pie graphs that can show the vesting schedule and the tokenomics. Now, the impact on price performance would be there can be some short-term sell pressure. There was just a massive unlock about a week or so ago. So watching price, we could get a good opportunity to buy in. At least I hope so. Not financial advice, of course. And the medium term, the steady unlocking, it could lead to moderate price fluctuations, but right now I'm looking at buying the dip with some of my stables on the side. So these aren't the best tokenomics, but they're not the worst either. So with a project like this, a newer one, I will take it. So they have good social media presence on X and within that Aether Cloud community. They have been participating in industry events like Consensus Hong Kong, ETH Denver. And right now, they don't have a lot of exchange listings, a few. And they just got on Coinbase, I believe. So these are good ones. I like to have coins that I know that retail would easily be able to buy if they start coming into the market. Same thing for any institutional investors. If you want to go to their webpage, you can check out their future roadmap. There's a lot that's coming. I don't want to get into all those details at the moment. But before we end with this conversation, we really need to discuss what are some of the bearish factors or things that could go wrong with Aether. Of course, there's market competition in the centralized space with like AWS and Amazon, Azure, and Google Cloud. And then within the crypto space, you have Render Network, which we are bullish on, and Akash, which is part of the Cosmos ecosystem. Now, obviously, with any decentralized application, we are concerned about compliance and evolving global regulations because you never know about a black swan event. But this leads me to my conclusion, and that is Aether addresses a major problem within cloud computing, the cost, the scalability, and the decentralization, things that we need for our Web3 future. They also have a competitive advantage. in that infrastructure. Gaming, AI workloads, they have strong token utilities. There is staking incentives, compute payments. Now, we are concerned about the difference between the circulating supply and the actual market cap. It is quite a big difference between 8 and 42 billion. That's quite a bit. Excuse me. But there's also growing market interest and expanding community. Roadmap milestones. These are all components of a project that is going to continue building, which is bullish. So, Aether, we're bullish, and we are bullish on the future of cloud computing, AI, DePin, and gaming. And this will be an excellent play for us and our bull run portfolios. Now, do you have another token out there in the cloud computing space that you're bullish on? Please let me know in the comments or the chat. And I appreciate that you've been in the stream for this long if you're still here. Now, I want to talk about our final part of the stream today. I wanted to take a quick look at our Solana positions on our Orca portfolio. I'll have to pull my wallet real quick. We're connecting. Now, we are looking at one of my Orca portfolios, the one that I like to show you here. Understand that most of our positions are actually in cold storage. That's where I store my bull run bag. It's a Tangent wallet. Links in the description. Safe, secure, easy to use, like a credit card. We love it. Use our links below to help support the channel. But we also keep a little bit on hot wallets that we like to earn a little bit of yield on. You can see that I'm earning around 6.4% a month. The majority of this position is Sol USDC, which right now is earning about 5.5% a month. I've always gotten really good yield with these concentrated liquidity positions on Orca. I like to take assets that I am holding on to anyway, in this case, Solana, and earn more Solana and USDC on my position that I can then allocate into other things. My current range is 112 to 170, but this has been something that I've been informing people within my private group that I let them know when I'm making changes in my DeFi portfolio or altcoins that I'm researching. So if you're interested, check out the links below in the description. And then I have these really small altcoin positions, PopCat with Nasana Render, that I'm keeping just to earn a little bit of yield on, get some price appreciation when the market starts to go back up. But I keep these positions really small because they do suffer impermanent loss. They are a lot of times let's just say they're very volatile. Now, I want to get into one of our last components of this video because I've talked a lot on my channel about DeFi lending. Okay. So here in just a minute, we're going to take a look at my Camino Finance lending portfolio, which is on the Solana network. Now, I don't just do this on Solana. We do this on Sway, AVAX, and Base. And I guess I have one position in another wallet on Arbitrum network. Oh, we need to open up our VPN before we do this. I am running out of time. All right, so I tell you what. I'm going to explain how I do this on Aave instead, because I can pull that up much easier. So we're going to be looking at Aave, and Aave is a old school DeFi lending portfolio, right? This is my base position right now. My health is slightly low. I like to stay above 1.5. But I wanted to take a look at our avalanche position today. This is our avalanche market. My health market is doing really good, and I'm going to explain why. I'm at 1.69, which means I could borrow a little bit and add a little bit more to my AVAX bag. Now, I don't earn a lot of yield on this AVAX. I'm lending this because I want to be able to borrow more assets. Now, if you look, I'm borrowing both some AVAX and some USDC. So the USDC, when I borrow that, it means that I'm long on AVAX. because if I'm borrowing a USDC and I'm purchasing AVAX, as AVAX increases in price, it's cheaper to pay back the USDC because the AVAX is now worth more. But if I believe that AVAX is going to drop, I borrow AVAX tokens, which are going to decrease in price, and then I can pay back the loan in USDCs, keeping the difference. That's my spread. That is a technical short position. What I'm doing right now is I'm still long on AVAX, but I've been slowly rotating small amounts of AVAX into, or excuse me, my USDC borrow into AVAX. For example, right now, I'm going to take a little bit of my USDC and do $100 more. I'm going to swap into AVAX because I believe once Bitcoin drops, AVAX is going to drop even more. Okay. We're going to switch to the Arbitrum network, approve, and then we will, sign our transaction and confirm. So I'm going to switch these tokens, and then hopefully if AVAX drops in price, I'll save a little bit of money on what I owe back. Now, I can't just, if I'm borrowing the AVAX and depositing in my wallet, you can't, there's an extra step you have to do because I am swapping within the lending protocol. If it's deposited in your wallet and you borrow the AVAX, you have to go to a decentralized exchange and swap that AVAX into a stable coin. If you don't, you're just doing one-for-one AVAX. That does not help you. By the way, what this is called is a delta neutral position if you do all of it that way, okay? So anyway, what I would like to do, and by the way, I'll make a detailed video about this in the future. So if content like that interests you, please let me know below in the comments or send me a message on Telegram or X. So please add us on X at CryptoZone1013, on Telegram at DadDeFi1013, and check out dadsdefispace.org. And of course, I learned these advanced DeFi strategies at Crypto Labs Research. Link in the description, 20% off your first month. And if you tell them Kevin at Dad's DeFi Space sent you over, we both get $50 USDT to begin your DeFi journey. I would like to say that I really appreciate each and every one of you for taking some time out of your day to spend it with me on this stream. And what I would really like to do is, hold on one second. Oh my gosh. I want to bring up one more point that just popped up on my X, right? And this is on Coinfessions, if you don't know what that is. So on Coinfessions, right here, you have an individual who is talking about meme coin investing, and he lost a 40K investment, 6 months being broke, dumping. He made 50K off one coin, another 40K, and it's all the way back down to $4,000. When you are in this space and you have profits like that, you take them, you realize them. So many people in this space show you, hey, I'm up 1,000%. But they don't take their profits. And if you don't take your profits, you can't realize the gains. And that is what we're going to end today's stream on. I hope all of you all have a wonderful weekend, and check out more videos on our webpage if you want to carry on your crypto and DeFi journey. Like and subscribe, share this video with anyone you think would benefit. And until next time, ladies and gentlemen, peace, take care, I'm out.